Hello traders, Steve Gans here, and welcome to the weekend update for September 29th. As many of you know and have emailed me, Mom is in hospice, terminal, got her comfortable finally yesterday, massive amounts of pain, finally got the drug mix right, if you will. And now my sisters and I are just kind of doing around the clock vigil with her. I'm a little blurry eyed. I had the 3 a.m. shift today. One of Mom's biggest fears was passing alone. And so we're doing all we can to make sure that does not happen. So anyhow, the wait continues. But anyhow, I just appreciates everyone's well wishes. And I'll be a little bit shorter today, partially because there's not a lot to say, partial because I'm just exhausted and I need to lay down, get a little bit of sleep, etc. So anyhow, looking at the open position. So this one is looking fine. It can handle some pullback, 100-point pullback or so without any issues whatsoever. If the market were to rocket higher from here, the break-even point on this call spread, the right wing is above zero, which means that, if the market were to go up, this is at a minimum going to expire with at least a 4% profit or so to the upside if the market were to break to the upside. In this tent, I can milk this a little bit further, maybe get in the 20% range or so out of it. As we do get closer to expiration, if the market stays chopping in this general range, which is kind of what I'm expecting right now, I will likely tighten up some of my downside risk as time progresses. But this downside risk is quite a ways away. I mean, that's below 5,400. That's 330 points. That doesn't mean that we can't get there quickly, but historically we don't, pending any major news event. This particular trade here, I'm not looking at making an adjustment yet, and because we were getting a little bit of a pullback here the other day, I wasn't really interested in pushing anything there too much at this point. But I am considering, let's see here, adding in a potential alternate diagonal. That would be adding this tent right here and closing up this spread, which would reduce this downside risk. That would recenter this tent a little bit, give us a little higher level of theta decay, give us a little more positive volatility so that if the market did drop drastically and volatility spiked, let's see, I just modeled decrease in volatility spiked, that could potentially help this trade. Again, calendars and diagonals are a little weird, and the modeling says that the two strikes are going to change at the same rate, and they don't. But that's all we can really show with modeling. So, but at the end of the day, the volatility more often than not does tend to favor a calendar or diagonal a little bit. So for those of you, just in case I'm not around at some point, my plan would be if the market were to drift back a little higher than where it is right now, back here, maybe above the 57.90, somewhere in that range, I would look at doing this move where I close out this lower spread and I add in a higher put diagonal. In this case, I currently have modeled a 57.50, 57.20. Again, the location of that could potentially change depending on how much the market might go up if it did go up. If the market does not go up, if the market just kind of stays and chops where it is, even so much the better for this existing position. Even a little bit more of a pullback could be good for this position. Over time, much like the other position I just mentioned, I would potentially consider taking out this put spread here, or at least tightening it up, taking some of the risk out of it, where I might sell this one and maybe roll up to this one, something like that, tightening that risk up a little bit to the downside. Again, if it looks like we're getting weaker and that we might end up in a pullback scenario. That said, I'm not really expecting that right now at this point. And then this particular trade, it can't really construct the graph because, as we know, on Friday, the bid-ask spread is so crazy wide on this. But if I hit that particular Analyze tab, it will show this trade. Now, this trade right now expires on Monday. If there is not a big pullback, this trade will expire essentially at a 40% loss, somewhere in that general range. Now, I am going to attempt to take a look and see if there's anything I might consider on this, possibly rolling it out, maybe even rolling it out and rolling it up a little bit to give me another chance, if you will, at getting that pullback in here. But I'll have to take a look at that when the market is open tomorrow and see if there's something that may or may not be viable there. So coming back to the graphs page, of course, I do have still the FTNT, the wheel, which continues to cook along perfectly fine after rolling that this last week. This next expiration, if I still do not get assigned, I'll be up 17% in this trade and still haven't yet owned the stock. And so, be up about $2,000 at that point if we roll through this next month or this next, 40 some days and I still don't get an assignment. In addition to all of this, I will likely look to see about adding a position in. Obviously, this could be a crazy couple of weeks for me. So if I do that, it's going to be a longer dated position. Most likely something that might be dated out, 50 days, somewhere along those lines, like many of my trades are. So it's not that I'm doing it for the reason of crazy stuff going on this week. It's because that's kind of my normal trade anyway. And it happens to fit the current trading environment as well. So what I'd like to see is maybe a little bit of a pullback in the market, maybe a little bit of an increase in volatility. If that were to happen, that would be a good time to see about entering a trade like that, a broken wing butterfly trade. Looking at our market, so SPX did in fact break out. It broke out of this block that I had drawn here. Then it pulled back right to the top of that block, and then it has taken off a little bit from there. Now, we did pull back a little bit on Friday. We opened higher on Thursday, sold off a little bit. Then it tried to open higher on Friday, but did not open as high as Thursday. Has sold off a little bit. Moderate volume on this little pullback, not massive volume, but moderate volume. So, from here, it would be perfectly normal and reasonable to get a pullback to this 56.50 range, maybe even all the way down here to the 55.50 range. That would not be out of character at all, and that would actually be good to get what's called backing and filling, letting the market kind of drift back down a little bit into here before it takes off to potentially make a higher high. It has been making higher lows, higher low here, higher low here. Did not make a higher high right here, interestingly enough. But when we pulled back to here, which again I had marked prior to this pullback, it came down right to that line, took off, came back down, hit it again. So at this point, it made a higher low, and here made a higher high. So that basically confirms that the uptrend is in fact still in place right now. So I have to keep in mind as I'm looking at trades that I need to still stay in kind of a bullish stance on any trade I might consider. In addition to looking at SPX, let's just take a quick look at RUT, although I don't have a trade open in RUT right now. RUT seems to be running a pretty darn wide range, which is one of the reasons I closed out my prior trade in RUT. I mean, these are massive moves when you're going from 2,300 down to 2,000. I mean, that's 300 points in an index that's trading at about 2,300. So that's, well over a 10% move in a matter of a couple days. So, and then bouncing back up about 10%, then selling off about 10%, then ripping back up about 10%. So that's a really big move in this index, and that's making it a little bit erratic right now, which is making me kind of want to just steer clear yet a little longer and kind of see if things start to settle out in some tighter zones here. So that's RUT. And then looking at the VIX, the volatility index, Obviously, we shot way the heck up here a couple months back. Then we did spike here a week or so ago. We're up another day here. Then we settled back down into this, 14 range or so. Then on Thursday, we started to get a little bit of a bounce in volatility. Friday, a little more bounce in volatility. So again, for me looking to potentially enter a newer trade, I would like to see volatility maybe get back up here into this 19, 20, somewhere in that range, maybe even 21, 22. That would present a good opportunity for getting out a new butterfly trade. Now, if it doesn't get up into here, there's still other things that I would consider doing, and I'll take a look at those again as time permits this next week. So with that, I'm going to wrap up the weekend update, everyone. Thanks for your understanding. I appreciate all your prayers. And that's it for today.